Good morning once again, and welcome to the Haven Financial Group radio show. We appreciate you listening. We got Lance Larsen, CPA with Haven Financial Group with us today, talking about everybody's favorite topic, of course, taxes, or maybe not. But I will tell you a takeaway from the last segment as we talked about tax treatment of IRAs and Roths is, it's pay now or pay later. You don't have to choose one over the other. The important thing to remember is tax diversification, meaning building a strategy with enough options to keep your retirement income flexible and that tax bill as low as possible. It really takes a plan, if you will, and we like options, and that simply means having Roth accounts, IRA pre-tax accounts, and also non-qualified brokerage accounts. We want all options on the table to come up with an income plan or distribution plan in retirement. And with all the options, it really gives us the flexibility to be able to put that plan together. And I just wanted listeners to know we want all options on the table as we approach retirement.
All right, terrific. 612-504-8400. That's how you reach the folks at Haven Financial Group. Let's talk a little bit more with Lance Larsen. He's a CPA there at Haven Financial Group. And Lance, there are a lot of myths surrounding Social Security and taxation. So let's try to clear up some of those if we could. The first is the whole idea that it's tax-free. That's not necessarily the case for everyone, right?
That's absolutely true. Earlier on in the show, I actually did make mention that an example that if a married taxpayers, all they had was Social Security, well, they don't even have to file. They're not going to pay any taxes. So I may have inadvertently contributed to that myth right there, Kim. But what it is that one of the big things that I keep hearing a lot of is, oh, I've reached full retirement age. I can make as much as I want, and I'm not going to get taxed on Social Security. Well, that's not necessarily the truth. What they're doing is that they're mixing up two separate concepts with Social Security. So the first concept that once you reach your full retirement age, yes, you can work and it does not affect your benefit. What we're talking about beforehand is that if you take your benefit early, meaning before your full retirement age, Social Security wants you to be retired. So if you're out there working and collecting on a Social Security benefit, then you have an earnings limit. Once you reach that full retirement age, that earnings limit goes away. So I remember talking with one client. She was going to take her benefit early and get probably around $1,800 a month. But she was also working as a self-employed individual, and she thought she was going to have a net income of about $60,000. So in this case, when we started doing the numbers, she was going to be about $40,000 over that earnings limit, which states that for every $2 that you go over, you have to give back $1 that benefit. So for her, she was going to be pulling in a little over 20 grand. But when we figured out that because of her $40,000 over the limit, she's giving back $20,000. So at this point, you look at it and say, wait, you get this money, but you have to give it right back. And now because you took it early, you have locked yourself into a lower benefit amount. And it made absolutely no sense. So fortunately, we're able to figure out those numbers and make a better decision of what she needed to do.
Absolutely.
So then the second part of this tax-free myth, this is the part two of the Social Security. So the first one we talk about making money before full retirement age and after full retirement age. The second one is now how do we figure out how much of this is going to be taxable? So the short form is, hey, take 85% of your benefit and that's what's taxable. Or we can run through this calculation where we take half the benefit plus other taxable income to get a number called provisional income. Then the provisional income goes onto provisional income brackets, which people hear sometimes 50% or 85%. That's part of the provisional income brackets right there to determine how much of your benefit is actually taxable. So if all you have is Social Security, we're going to need a married couple to get somewhere around $100,000 before we even start thinking about having to file because of how the provisional income is calculated on that $100,000 of gross Social Security benefit. In one of the classes that we do, we throw out the example of a married couple that receives $40,000 in Social Security benefit and $20,000 of IRAs money. Well, when we figure everything out, that couple actually pays no tax versus another couple that has just the reverse numbers, $20,000 of Social Security and $40,000 of IRA money. Well, they end up having to file and pay taxes because of how the numbers split out.
Mhm. So really, when it comes to Social Security, when someone, you really want to just put together a really good strategy. You want to think this through before, for a number of reasons, not the least of which is that your benefits are higher the longer you wait. But for tax purposes, you really want to think this through before you start to draw.
Exactly. So one of the things that I've seen with some people is kind of what we call a tax torpedo,
Yeah.
where you take an IRA distribution and that IRA distribution, we think, yes, 100% of that is taxable, but because of how it affects your Social Security, you bring in $1 that IRA, you're bringing along 85 cents of taxable Social Security. So instead of having a $10 or $15,000 IRA that you think is taxable, now you just created a $25,000 to $30,000 taxable income increase for yourself.
Mm-hmm.
Kim, a couple comments on the topic of Social Security
Mm-hmm.
is it's why we do a lot of classes, have for years. We just did some this week, Social Security and tax classes. So come to our website, havenfinancialgroup.com, and attend any of our classes, whether in the education center or in the public eye, because a lot of confusion. If you're listening and go, well, I just don't know when to turn it on. Some people have this idea they're going to sock it to the government. Don't let that be the decision maker. It's not going to affect the government at all. But what I'll say is the earliest you can take it is 62. Over 70% of Americans do that, many times making the wrong decision. The latest you're going to take it is 70. Only 1% to 2% wait till 70. For some people, it just doesn't make sense to wait till 70, but for others, it may make sense if you're still working. So making the right decision. A study was recently done. The average American leaves $182,000 on the table with Social Security by making what we call a suboptimal decision, making the wrong decision on turning it on.
Mm-hmm.
Let's try to make the right decision. If you're listening and you want to know, if you come in and bring your Social Security report, we'll run a report, kind of a roadmap as to what makes the most sense. Ultimately, it's your decision, but let's try to make the right decision, an educated decision. And then I want to put to rest a solvency concern. You know, news breeds fear. I don't care what side of the aisle you're on, news breeds fear. And here's what, in a nutshell, here's how it works. Social Security works like a pay-as-you-go system. Today's workers, many of us listening, pay payroll taxes, which then fund today's retirees. The trust funds are essentially a reserve cushion built up over decades. But because costs have exceeded income since 2021, 21, that cushion is shrinking, and we're going to run into some serious issues for solvency as we speak around 2035, depending on the source, where we're going to run into issues. There's where you're talking about certain reforms that none of us are going to like, but potentially there are going to be minor changes. But I'll go out on the limb here today on the air. My opinion, and many of our opinions, is they've talked about both sides doing away with Social Security for many, many, many years. It's still here. Okay. Do I think they're going to take it away? Oh my goodness, Larry, I heard they're going to take it away. They're going to take it away. I have zero fear they're going to take it away. But seriously, there's going to have to be some sort of reforms that none of us are going to like. But please take away. There's many people in America that have become too reliant on Social Security, but taking away, I just don't see that happening.
But there are a lot of people, Larry, to your point earlier, that they turn 62 and immediately turn it on because they're worried about the solvency. So they're worried that they're not going to get their portion of Social Security. And then, like you said, and then they also want to say, I'm going to get the most from the government for the longest period of time, when in the end, the government doesn't really care. And you're leaving money on the table because your benefit would have been bigger the longer you waited.
Yeah, fear is driving their decisions, and fear is a never good way to make decisions. We know that, but unfortunately, a lot of people are driven by it. Be careful. We like the news, but in moderation, please. It may drive you crazy otherwise.
So what I think I'm hearing Larry say is, sit down with an expert who can look at your situation and really make your Social Security benefit you, not the government and not anybody else, so that you can draw it to the best of your benefit. And that does include looking at your entire financial situation to determine the taxable portions of Social Security, when it might be best for you to draw, and how you should go about doing so. 612-504-8400 is how you reach the folks there at Haven Financial Group. These experts can sit down with you folks. They can resolve all kinds of problems, not the least of which are your tax issues. Of course, you can go in and sit down and talk to them about all kinds of retirement benefits, putting together a great portfolio that makes those retirement years the very best they can possibly be. 612-504-8400 is the number. When we come back, we want to talk about the One Big Beautiful Bill Act and the effects that might have on your estate tax and taxes in general. This is the Haven Financial Group Radio Show.